Hey everyone, it's Daryl from the Money Level Show. Sorry y'all, I ain't got my hair cut in a while and stuff, so I'm trying to get some things going on. I've been very busy lately and everything, so I'm just gonna shoot a couple thoughts off. I watched Jerome Powell's interview with the Wall Street Journal today, and some very hawkish comments came out of that interview. A lot of it was about the markets. A lot of it was about interest rates. A lot of it was about the Fed's plan and how they're going to control inflation and how they're going to get inflation under control. I mean, we'll see if that ever happens. I mean, obviously, the last time we've had inflation like this, when Volcker raised interest rates, they were allowed to go up to about 20%, and I don't foresee interest rates going up that high with the current economic environments and with the current amount of debt that we hold as a government. So I don't believe that interest rates will go too high, but Jerome Powell is saying that they have to get inflation under control. And what this means is that they are going to increase interest rates, and they are going to eventually tighten. Now, what does this look like for us? This looks like the equity markets are going to take a big hit. I'm not sure how the energy sector is going to do. I mean, obviously, energy is benefiting from inflation. Commodities benefit in inflationary environments. And so whenever a lot of the tech or growth stocks have been plummeting, my stocks that are in value stocks, that are in dividend paying stocks, that are in energy, have been doing really well. They've been holding up really well. They haven't been getting decimated like a lot of these other sectors. So we will see how this impacts the markets, but the Fed is saying that they will raise interest rates even faster if they need to. So I just foresee that the markets are going to take another big hit. The markets are going to plummet. I mean, we've seen that these high valuation stocks are just getting killed, and I don't believe that we're at the bottom yet. You have a lot of people calling for a bottom. People are saying, oh, we hit the bottom and everything, and you're seeing the stock market even rally today. But I just don't think this is going to last. It's not sustainable, especially in the environment where the Fed is tightening, sucking liquidity out of the system, and raising interest rates. We've seen that mortgage applications are going lower, refinance applications are lower. Eventually, it may impact the housing market and the housing prices as well. So there's a lot of things to consider right now. The risk of recession is pretty high. Jerome Powell was asked about being able to control inflation and having a soft landing, whatever that looks like, without causing a recession. And he said that this is the first time they've ever been faced with this situation in history. And so he doesn't know what that looks like pretty much. So he's hoping for a soft landing. I highly doubt that they are going to get a soft landing. I believe that they are going to cause a recession if they continue at this rate of hawkishness. So how I'm kind of positioning myself right now is I am really focused on dividend paying stocks and stocks that don't have high valuation, stocks that are in the commodity sector, stocks that are actually benefiting from inflation, because we see that the supply side still has a lot of constraints. So that is continuously keeping the price of oil high, continuously keeping the price of a lot of these other commodities pretty sustained. Like the price is pretty sustained. And so even when a lot of the other stocks have been plummeting, I've been seeing that in my portfolio. It's like, okay, well, my oil stocks are actually holding up pretty well. My gold stocks haven't went down a whole lot versus like stocks that I own, like Twilio went from $170 to about $92. So that's just a big difference. So that's kind of how I'm positioning myself. I'm positioning myself with stocks that pay me. So that's kind of just what I'm focused on. The stock has to be a good valuation. It can't be overvalued, and it has to pay me. It has to pay me a solid dividend. I'm in a lot of companies that are paying about 7%, 8% dividends, some 6%, because at least that's closer to inflation numbers versus a bond that pays 3%. So I'm into companies like that. I am also starting to dabble in the REITs, which is real estate investment trust stocks. And I'm only touching them because I believe that right now the rents are high, inflation is definitely high, and rents are high, and a lot of these real estate companies are making a lot of money based off higher rents. And so, and that's not to say that the housing market isn't going to take a hit, but REITs do pay a good dividend. And so I'm focused on stocks that are actually paying me pretty solid dividends to help combat inflation and to even hedge me to some degree from any market volatility. So we've seen that the market actually rallied today after Jerome Powell's comments, and we saw this happen about 2 weeks ago when the Fed came out and raised interest rates by 50 basis points. We saw the market actually rally after that happened. It rallied to the end of the day. I remember looking at that and I was like, what? Like the market is rallying after the Fed raised interest rates? And then the next day, the market straight tanked. It plummeted. So we'll see what happens in the morning. If the market is still going to be up on the day or on the week or whatever, and we'll see if the market acts or if it plummets tomorrow. So we'll see what happens. And I've told you all that, you know, when you're in a bear market, the downward trend, the trend is downward, and it keeps going down, but you're going to have these rallies along the way. So you're going to see stocks actually have a bounce. It's called dead cat bounces. So you're going to see some bounces along the way where you can trade and take profits. So otherwise, if you're not trading and taking profits, I would not fight the Fed. I would not be buying in to a lot of these companies here, still at these levels, even though they're cheap. You know, and I mentioned that the other day, like I'm averaging into some of these companies. Yeah, I do that with M1 Finance, where I'm dollar cost averaging and I'm buying partial shares. I'm done buying full shares of these companies because we just don't know where the bottom is. And the Fed seems like they're just getting started, and they're going to raise rates again in the next month or so. So I just think that these growth stocks can go down a little bit further. So I am just kind of just playing it safe right now, being a lot more conservative, holding some cash, and I'm into some bonds. Since they've been getting beaten up, I'm into some bond ETFs just to sell for cash whenever I need it, liquidity. And I'm just kind of being safe. And so being safe and conservative. So I know like there's going to be limited places to hide when things really start to go grim. But just wanted to give you all those tips and ideas of what I'm doing. So let me know what you're doing. And I just want to encourage you all, do not fight the Fed. I mean, you can trade against the Fed, use the Fed to your advantage. You know, if you're going to play puts, you know, after these rallies where you see the market go down or something like that, or you play calls whenever you see the market going down and you know the market's going to bounce a little bit. So those are ways that you can actually play this market, but I don't believe it's going to go down in a straight line. You're going to have some bounces along the way. So drop in the comments what you're doing, how you're protecting yourself, how are you investing, how's your financial health during these times. And I mean, we've seen crypto take a big dip. I did average into Bitcoin. I think it's going higher. I mean, not higher, I think it's going lower at some point. But right now it's consolidating in the 29, 30K range. I bought some at about 26,000, 27,000, 30,000. So I'm just kind of averaging in here and there, but you know, I'm not really playing with the altcoins. I'm not touching them. I think they have a lot farther to go. And I saw, you know, just the other day, just those altcoins going down, you know, 20, 30% in a day just showed me like, wow, just so much money just being erased from the crypto space. I think it was like $1 trillion was erased from the crypto space. So I just hope that y'all being safe, protect yourself, hedge yourself. You know, in these environments, cash is king. The dollar has been going higher. I am bearish on the dollar long term, but right now the dollar is highly valued compared to equities. So, I mean, it's not as valued compared to inflation. I mean, gas prices is higher than the dollar. I mean, your dollars are going to get you much gas, but your dollar will get you a lot more stocks than it would before. So, so having some cash on hand is important, then obviously for your emergencies and such. So thank you all for watching. Be sure to drop a comment, hit the like button, spread this video. All right, y'all. Y'all be blessed. All right, peace. There's no way to end the live.